The gold price edged lower, rallied, and then edged back below $2,000 once again on Monday after reaching that level for the first time since mid-May in the final hours of Comex futures and options trade last week, as Israel widened its ground offensive in Gaza, but remained more cautious than many analysts had expected, writes Atsuko Whitehouse at BullionVault. With the U.S. Federal Reserve expected to hold its key interest rate at near two-decade highs this Wednesday, the gold price hit new all-time highs in most major non-dollar currencies, including the Chinese Yuan, Euro, British Pound, and Japanese Yen, ahead of tomorrow's Bank of Japan decision, and then the UK's Bank of England on Thursday. The US Treasury Department will also announce its quarterly bond sales plan this week, wary of how its announcement in August, when it set a plan to borrow $103 billion of longer-term securities the following week, spurred the sell-off in US government debt, which has since sent longer-term interest rates surging up to multi-year highs. Time for a breather, I feel, says bullion market analyst Rona O'Connell at brokerage StoneX Group Inc. The hue and cry a couple of weeks ago when gold bounced up as of the 7th of October, the day of Hamas's atrocities across southern Israel, was in my view a bit overdone. I still think the gold price is consolidating and building a base for further gains, subject to geopolitics. Ahead of last Friday's late spike to a $2,000 gold price, hedge funds and other leveraged speculators in Comex gold futures and options grew their bullish positions by 22% from a week earlier, while cutting their bearish bets as a group by 26%. Overall, that pushed the net long position of managed money traders 117% higher to the largest since the beginning of August, according to positioning data from US regulators, the CFTC, for the week ending last Tuesday. It also meant speculators as a group bought the notional equivalent of 328 tons of gold in just 2 weeks, the second fastest fortnightly pace on the CFTC's near two-decade records. It is too risky to start a new gold short from here, as there is still potential for upside, says Bruce Ikemizu, chief director of the Japan Bullion Market Association, in his latest market note. In contrast to Comex derivatives, gold-backed ETF trust funds saw further liquidation last week, with the Giant Spider Gold Trust and the iShares Gold ETF shrinking by 0.2% and 0.5% from the previous Friday, despite holding unchanged in size going into the weekend. iShares Giant Silver ETF Trust also did not change in size Friday, growing 0.4% for the week. The price of silver, which finds nearly 55% of its annual demand from industrial uses, rose 1.3% today to $23.40 per troy ounce, after falling 3.9% last week. Oil prices slipped more than 1% on Monday, cutting one-third of Friday's jump on news of Israel stepping up its ground incursion into Gaza. European stocks rose 0.7% on the Euro Stoxx 600 index after hitting 10-month lows, on course for a 4.6% monthly fall, as the euro and UK gold price in pounds per ounce edged back from the weekend's new all-time highs at €1,901 and £1,658. Please like this video and subscribe to our channel